Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Good afternoon, and welcome to the show. This is Andy Webb with Lifestyles Unlimited, and as always, we're working on your financial freedom. Hey, on today's show, I want to dispel some things I've heard recently, some real estate investing myths. Again, these are things just have come up recently in the course of conversation, things I've been asked by friends that I know that know what my wife and do, what we've been doing for almost a decade now, investing in real estate, or in a few occasions, just people I've met out and about, quote unquote, on the street, or even by you, listeners. I've gotten a few questions, and some of those sound like this. It's the wrong time to invest in real estate, isn't it? Common myth. Or another one was, it's just going to take too much of my time. I don't have that right now. I don't have that time available. Another one was, real estate investing is the slow road to wealth, isn't it? Well, depends on how you operate. If we have time, that's the last one I'm going to hit, and we'll try to get to that one. Got a number of topics for you. One came up just yesterday. I met a realtor. I'll tell you in a minute where we were, but I just happened to meet this person. Turns out she's a realtor, full-time realtor, and she said, Andy, I, of course, disclosed what I do because I want her to know, because she may have some good investments out there for me, right? But she said, I've thought about getting into real estate investing, but I'm afraid of the maintenance nightmare. And that is exactly how she put it. The maintenance nightmare. And I literally had this conversation just yesterday. So what I want to do today is dispel some of these myths. We'll hit some of those. There are a few others that I've taken from, again, conversation, maybe questions that you've had for me. And if you have questions for me, you can email me at askandy@luinc.com. Again, askandy@luinc.com, or give me a call. This is a live show. The number here in the studio is 855-497-4335. Again, 855-497-4335. Now, let me tell you where I was when I met this realtor, and I'll tell you, I'm coming to you today a little bit sore. My wings, my arms are a little bit tuckered out. I'm a bit bruised, a bit worse for the wear. Well, I enjoyed my financial freedom on Thursday, took myself up to the drop zone where I like to jump, where I have not been jumping frequently enough, made a few jumps on Thursday, and then went back for an all-day marathon. For me, I got 7 jumps in. Some people probably did more, some people did fewer, but boy, as a result, I am just beat up. But I'll tell you what, it was great to be back out there. I have not spent that much concentrated time at the drop zone in a while. And much like our real estate investor community, it's a very diverse, very warm, very welcoming group. A lot of happy, smiling faces. I mean, we're having fun. Adrenaline's pumping. you got everything to smile about. Jumping out for the airplane aficionados out there, jumping out of a de Havilland Twin Otter and also a Cessna Super Caravan. We had both of those planes turning all day long. And there were small groups jumping. There were folks up there doing tandems, making their first jumps. There was a 20-way, a formation skydiving competition going on as well, which my wife participated in. I skipped that one this year. But it was great to be back out in that crowd. That's where I met the realtor. I also met a contractor, guy that does roofs. Great to know, great connection. Just met this guy for the first time. Always talking about what we do. And it's very, very helpful. But it was great to be back out in that crowd. And it reminds me a lot of what's going on at Lifestyles Unlimited. Namely, we are getting back out together. We've resumed our live in-person events. Now, throughout the pandemic, our events have continued to be live, but we've done everything virtually. We've done our case studies virtually. We've done our single-family road trips, our multifamily road trips, our free workshops, our 2-day seminar, all virtually. And now we're resuming those. In fact, we've got one of our, if I pull up the calendar here, right, just today, we've got day 2 of that 2-day financial freedom program, the seminar where we talk about on day 1, single-family investing, day 2, apartments, going on live right now in person in Nashville, Tennessee. And looking a little bit farther ahead, I'm really excited because we're going to resume our case studies here in the Dallas-Fort Worth Metroplex, where I am, live as well, here in the Irving offices on the 17th, which is just next week on Thursday. Single-family road trips coming up this month, also live and in person. Multi-family road trips coming up this month, also live and in person. Now, for those that are still maybe a little virus shy, boy, I'll tell you, at the Drop Zone, I don't know how many hundreds of people I counted out there. It was massively crowded. No one was shy. When you have 23 people crammed into an airplane, that Twin Otter, you're pretty close and snug. But if you're a little bit nervous about getting out there and getting close and snug at one of our events, we are also continuing to do these virtually online. So that means you can be at the case study in person, seeing those numbers, hearing that story, seeing how that single-family house worked out, the cash out of pocket, the cash-on-cash return, all the good details around that particular deal, or maybe the apartment deal, maybe that's what you're focused on. You can do that live and in person, or you can continue to do that virtually. If you want to register for any of those events, go check out lifestylesunlimited.com. You can learn more there. I'm very, very excited. I mean, just getting back to these events, and there's one big event I'll tell you about a little bit later. It's going to be right here in my neck of the woods as well. Biggest event of its nature in the world for real estate investors, going to be right here in Dallas-Fort Worth. But first, let's start talking about those myths. There are a lot of them out there. I've hinted at a couple of those. We'll touch on those. And this is an important topic because just like with this realtor, so this realtor, I made a jump with her yesterday. There's a group of us, 5 or 6 of us. And as we were introducing, never met, these are all new people to me, as we were introducing ourselves, hey, just comes up. And again, she just has this notion that there's this maintenance nightmare, and I just don't want anything to do with that. Where does that notion come from? Well, maybe you talk to somebody. Maybe you have a brother, a sister, a cousin, an uncle, a nephew, friends down the road, neighbors that tried real estate investing, kind of dipped their toes in, but maybe just made a stab at it without having a proper background. Now, do you have to come from a long lineage of real estate investors? No, I do not, but I got educated. But these people perhaps did not. And they had those nightmares, and now they've conveyed those nightmares to you, and you think about real estate investing, it becomes a nightmare in your own skull. We have to dispel that, because that's just one of those mental hurdles that gets in your way and keeps you from taking action. We're going to head into a quick break. When we come back, I want to answer first and foremost that big question I hear a lot right now. Is it the right time or the wrong time to invest in real estate? We'll talk about that. And is it real estate investing in general? Isn't it just a little too risky? I've been doing it for 9 years. We have ways to mitigate that. We'll talk about that, so stay tuned.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. This is your host, Andy Webb, and today on the Lifestyles Unlimited Real Estate Investor Radio Show, we're going to dispel some of those myths around real estate investing that you may have heard, that you may be latched onto, that may be creating hurdles in your own mind that are stopping you from moving forward with this wonderful track that you can follow to become retired. Real estate retired in 5 years or less. Very, very fast. And I bring this up in part because I've gotten some questions from you in email recently. I've run into some people just man on the street in the course of the conversation. Yesterday, it was a woman at the Drop Zone, as it were. Some of those myths manifest themselves. And concretely yesterday, the question I got from the realtor, and I told her, you are perfectly positioned. You've been doing this full time. This is all she does. You have your farm that you work in that you know very well. You've got access to the MLS. You have that innate knowledge that comes with being a long-term realtor. What's holding you back? She said, that maintenance nightmare. I'm afraid of dealing with the maintenance. We're going to talk about why that can be a big myth. Now, your uncle, your cousin, your brother, your sister, someone you know may have gotten into real estate and run into those nightmares because they didn't do it right. We're going to talk about what doing it right means to help you dispel that myth and move on past that hurdle. Now, another one that I've heard from some folks lately about is that, isn't it the wrong time to invest right now? Look at the prices. They're so high. Listen, the best time to invest in real estate was yesterday. If you missed that boat, the next best time is today. And somebody told me a long time ago, we were probably 2 or 3 years in, type B personality, overthinking a deal, an apartment deal in particular, and this gentleman said to me, you cannot time the market. You just don't try to time the market. Just get in. Remember that real estate is very, very forgiving, and he is absolutely right. Now, it took me a few years to digest that, process that, understand that, and see it in action with my own properties, but he was absolutely right. And thinking even farther back, I can remember we got started in 2012. A couple years in, people were running for the hills back in 2014. It's too high. The market's too high. Things are going to collapse. This cannot continue. What did it do? It continued. I bought 5 houses that year. If I had listened to people then, I would be far worse off. Or not as well off, let's put it that way. It's a slightly different spin there. But the point is this, you cannot time the market. And if you look at the fundamentals right now, in the right markets, Texas, for example, they are there. I looked at an article in Texas Realtor Magazine just recently. They outlined a couple of points from the 2020 census. Here's a great number for you. 3,999,944 new Texans in the last decade. That's the largest increase of any state nationally in that time. And as a result of that, you've probably heard the news. We've gained 2 congressional seats. So people are moving to Texas, some of the Sun Belt states, a couple other states that gained congressional seats, Colorado, Florida, North Carolina. Who's losing them? California. The East, Northeast, Midwest. They're coming south. And those fundamentals help us as real estate investors. People are moving to Texas. They're moving to the Sun Belt states. And that supports our rents. I mean, we put a house on the market not 2 weeks ago. 5 days on the market and back off again. Half of that time was spent doing due diligence on the applicants. We had so many applicants. It just took that much time to work through the process. We had the pick of the litter. It's good for you, good for me. So fundamentals are there. And another thing you want to keep in mind, what news did we just hear? We talked about this about a month ago. Inflation, it's here. 4.2% in April. Now, even higher, 5% growth in May. That is the fastest rate since 2008. You cannot tell me that inflation is not here. Now, the Fed's going to try to tell you that it's transitory. It's just a rebound from the pandemic depression, the pandemic recession. I'm skeptical. But in any event, real estate, you can't go wrong with real estate. But as an inflation hedge, you cannot beat that. It's throwing off cash flow. If you're buying right, you're capturing equity. Your residents are paying down the mortgage every month. And as inflation occurs, values go up. It's going to push up the value of your assets. And if you have to, you can take those rents up. And that's what we're seeing right now. Rents are increasing. So is it the wrong time to invest in real estate? No, it is not. It's a very good time to get in and ride that wave and be prepared for that inflation. Get that hedge in place. Number 2, I hear a lot is, but real estate, it's too risky. What if I get a lemon of a house? What if I get a bad tenant? What if the economy tanks again? What if? Sure, look, there is risk. Just like with anything in life. And thinking back to my day yesterday, 7 jumps out of the de Havilland Twin Otter and the Caravan super van. What do we do as skydivers? It's an extremely risky sport, and we mitigate risk. We do gear checks before getting into the airplane. Check everything. Pins in place, handles reserved, cutaway handles are in place, etc. Gear checks before exiting the airplane. We have helmets. We have altimeters. I've got one on my wrist. I've got one in my ear that beeps at certain altitudes just in case. Wake up, Andy. Time to pull. And if the worst happens and someone knocks me out on the jump, I've got an automatic device that detects my velocity. And if I'm going too fast at a certain altitude, it fires that reserve for me. Best insurance policy you can have. But those are ways that we mitigate risk in that high-risk sport. Now, I will not declare real estate investing a high-risk sport. Again, you've got that myth in your head. There are certain risks. One might be affiliated with the property. What if I get a lemon? Well, how do you mitigate that risk? You do your due diligence before buying. I don't care if we're talking single family or multifamily. In multifamily, that due diligence process is very long. It's very lengthy. A little bit easier on single family. What do I do on single family? I send out an inspector. I send out my general contractor, or multiple if I want to get multiple bids. I send out my HVAC guy. I send out my foundation company. Right, we got in a ton of rain, the deluge. You should have seen the drop zone yesterday. Everyone's water skiing in as they landed. It's so wet. So with that water comes foundations lifting as our clay absorbs that water. And a month from now, when the grass is brown and the cracks are forming and that clay is shrinking, your foundation's moving again. So we're going to get our foundation company out there to take a look at that and see, do we have any issues? And if we do, address those. And if it turns out, no, that is a lemon, we walk away. What if I get a bad resident? Well, we mitigate that resident risk by proper screening. Like I said, it's a hot market now. One day on the market, I got eight applications, several sight unseen. Some made it out to view the property. Plenty of choice. We have plenty of choice, and we do our due diligence, which means running that background check, credit, criminal, eviction, calling the current employer. Are they still employed? like the pay stub seemed to show, calling the current landlord, calling the prior landlord. Did they take care of the property? Did they give proper notice? Any lease violations, any pets that I need to know of? We dig in. But you, right now in particular, again, going back to those fundamentals, so many people moving here, you're going to have your pick of the litter. And on top of that, we're going to do other things to mitigate that risk. Among other things, you should require renter's insurance. And I'll talk a little bit about that here in just a moment. Economic risk. Let's just think back briefly to the housing crash of 2008. What happened then? People lost their houses. What did that mean to the rental owners? Rental demand increased. It didn't go down. It increased. Rent stayed flat or went up. Homeowners became renters. My best renters were people in that position. Stay tuned. We're going to address that issue of maintenance is a nightmare when we come back.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
This is Andy Webb. You got questions today, the number in the studio, it's 855-497-4335, or send me an email to askandy@luinc.com. If I can get to those during the show, I will. If not, I'll answer you afterwards. Again, that's askandy@luinc.com. And we're addressing today certain myths that exist out there around real estate investing, whether you heard this from an uncle that tried it and failed, didn't follow the right map, typically, was not educated, watching some TV program, reading the news. There's a lot of bad information in the news these days. Speaking of the news, I was looking online. That CDC eviction moratorium is still out there. Should be expiring into this month. We'll see what happens. It's been disputed. Certain judges have said no, then put a pause. It just keeps changing. But that aside, common fear I hear, common myth is that real estate investing is risky. I'll tell you this, jumping out of airplanes is risky. But even that I've done for 17 years, 1,600 or so jumps, never had a malfunction, not a major one where I had to cut away my main parachute to go to my reserve. Knock on wood. That's risky. Real estate investing, not if you do it right, not if you're educated, not if you follow a good model, not if you know what you're looking at. That question of what if I get a lemon? Well, you do your due diligence. You have people go help you do that due diligence. And over time, you learn what to look for. A good place where I gained that knowledge, because I come from a background that has nothing to do with real estate investing. Nothing. Knew nothing before I joined Lifestyles Unlimited in 2012. But what did I do? I got out to as many of those events as I could, including the single family road trip. And that's going to be live and in person this month here in Dallas, where I am. Also in Houston, San Antonio, whatever markets we're doing those in right now, you're going to be able to attend those live. You can also attend those virtually still as well if you're still feeling a little bit shy about the coronavirus. But I'm looking forward to that. That's a good place to help you mitigate risk, because you learn what to look for in houses. You walk a property yourself. You start feeling the vibe. You start to understand, okay, what's going on with the roof. You start to feel that foundation. Now you get the company out there to help you troubleshoot that as well. But that helps you mitigate risk, that education. And events like that single family road trip, that's June 26th, tremendous for helping you build out that knowledge base. Now, we're talking ahead of the break about, what about the economy? What about risks around the economy if it tanks? And we saw in 2008, when it did tank, housing market in particular, that actually created more renters. Now, mom and pop shops, people that were perhaps over leveraged in the rental sphere, they may have suffered. But most successful investors weathered that just fine. They saw more demand, might have even taken their rents up, came out the other side, and continued on. And an important thing that you need to consider, and if you go to lifestylesunlimited.com, we are an education and mentoring group. There's a lot of educational components on that website. You can catch all the past radio shows as archives, as podcasts. And if you click on the education button, there's a lot of articles out there, and you'll find an article around Del Walmsley. Del Walmsley founded Lifestyles Unlimited over 30 years ago. And he's got 3 rules to investing. That is a very good article to read. His number 1 rule is never lose money. And this ties into that notion of what happens if the economy crashes. Well, you got to remember, when you buy, you make your money in real estate when you buy, I should say, not when you sell. Sure, you realize those gains, you realize those monies at the time of sale, but you really make the money when you buy. You buy right. And when Dell says never lose money, that's what he's talking about. When you're buying an asset at a discount, whether it's an apartment complex, an apartment community, single-family house, duplex, triplex, quad, if you're getting it at a discount because it's distressed or the seller is distressed or both, you're creating equity. We call that equity capture. It creates a buffer. So if something does happen and you feel like you do need to sell, you've got that wiggle room, you've got that buffer. But commonly, we also have something else on our side, which is called time. If I need to hold through a little bit longer because prices have dropped, I just hold on. If the economy's down, what are we going to see again? More homeowners distressed, more renters coming knocking on our door. So too risky, no. And the risks that are there, you can mitigate. And that takes me back to the drop zone conversation I had with that realtor just before climbing into the airplane. She said, I would love to do it. I've been thinking about it. Been a realtor. I asked her, are you a full-time realtor? She said, yeah, I've been doing this for years. Why don't you do it? I'm afraid of the maintenance nightmare. This dovetails with that fear of risk. And it is a common misconception. Like I said, maybe you heard it from your uncle, your buddy, whoever that jumped in, didn't know what they were doing, made mistakes and big mistakes and had those maintenance nightmares. But if you're doing it right, for example, if you're following the lifestyle's motto, which is best product, best price, what are we doing? As part of that best product piece, we're taking down this asset that needs work and we're going in and we're fixing up everything that needs work that we think might break in the next 3 to 5 years. So when we put that on the market at the best price, we're getting the best people and we don't have any maintenance nightmares, nothing close to it, because we fixed everything already. And you've done your due diligence to make sure you're not getting a lemon. And in the process of doing that due diligence, you've learned that the AC system is on its last leg. So you've gone ahead and replaced that. You've replaced the water heater. You've done that cosmetic stuff, of course. We always do that. Take that 60s build with the green shag carpet out of the 60s and into the 2020s. All new flooring, all new paint, all new fixtures, light fixtures, sink fixtures, toilets. You're mitigating your risk of even having maintenance issues when you go in and you put the best product together. And then, like I said, when you market it at the best price, holy cow, we put our rental recently that we had open up in the mid-cities just a little bit below market. And like I said, we had 8-10 applications in the first couple of days. That thing was back off the market within 5. And half of that time was us spent doing our due diligence on the applicants. And that takes me to number 4. A lot of people have this misconception, this myth, that managing real estate is a huge headache. I self-manage my properties, my wife and I do, and we're spread all across the DFW Metroplex. And I can tell you, it's just not a headache at all. If you're doing it right, if you're going in and putting the best product on the market, that just it shortcuts a lot of those problems you might otherwise have. Now, typically, people will come to me. You hear these pithy phrases that kind of summarize that notion of headache. Tenants, taxes, and toilets. Tenants, taxes, and toilets. Well, tenants, what does that mean? They're talking about dealing with the hard cases, the problems out there. Well, you resolve that, like we already said, by doing due diligence and getting proper screening in place. And then on top of that, use a strong lease that is in your favor. If you have your own, take that to your real estate attorney, have them vet that to make sure that it's solid. If you're working with a realtor, they'll probably use the Texas Association. If you're in Texas, the Texas Association of Realtors lease, very strong. Or go one step further, join one of the local apartment associations, and you'll have access to the Texas Apartment Association lease, very much in your favor. So make sure you have good documentation and good contracts. That's what a lease is. It's a contract in place. And then you want to have good resident education. This is very important. Be very clear. So I did a move-in prior to getting out to the drop zone and making my 7 jumps yesterday. I went to the mid-cities. I met the new family. I moved them in, meaning I just walked through the property, showed them everything they need to know, where the water shutoff valve is, where the electrical panel is. And we talked about what to do in the event of emergency and what to do for non-emergencies, more importantly. Be very clear in your expectations up front to set the tone for that relationship. And that tenant part of that equation is minimized. Taxes. Tenants, taxes, and toilets, right? That common phrase that we hear, that pithy phrase. Well, there are 2 types of taxes typically that we're thinking about with real estate investing. Number 1 are property taxes, and number 2, the federal income taxes. Property taxes, sure. Did a whole show on that last week with a tax protest company. Give that a listen. That's out on the archives. Go to lifestylesunlimited.com. Sure, there are fixed costs. We protest those. We pass through the costs in our rent if we have to. What about income taxes? We'll come back from the break. We'll talk about that. Stay tuned.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. I'm your host, Andy Webb. If you've got any questions today, we're in our final segment. The number here is 855-497-4335, or send me an email to askandy@luinc.com. And through the course of the show, we've just been addressing some of the more common myths that I hear around real estate investing. Most recently, the big one I hear is that it's the wrong time to invest because of where prices are. But if you look at inflation, I think they're just going to keep going up. There's no better hedge against inflation than real estate. Least of all, because it throws off cash flow. Look at gold. People tout gold. Yeah, it's going to go up in value. But it doesn't throw cash flow to you. You got it sitting in a bank vault somewhere, I guess, or in the backyard like my dad did once upon a time. No cash flow there. In fact, no one knows where those gold bars are anymore. Total loss. But real estate keeps throwing off the cash flow. And that's a common issue. Price is too high, wrong time. You cannot time the market. Best time to get into real estate was yesterday. If you missed that, get in today. Another common one, I heard this just yesterday from a realtor that I was jumping with at the drop zone where I was skydiving. She said, yeah, I've been thinking about it, but I'm afraid of the maintenance nightmares. And I told her, I said, look, if you are fixing up the property as soon as you get it, taking care of anything you think could be an issue and everything beyond that, if you can, if the budget allows, you're not going to have that maintenance. I told her the house I just handed over today, I've had it since 2016. I've had 0 issues in 5 years. Knock on wood. Hopefully this isn't the year, but if you're putting the best product out there, you don't have anything to worry about. And that took us to another common myth, which is that it's a big headache to manage because you have tenants, you have taxes, you have toilets, the 3 T's. We talked about the tenant side. We talked partly about the taxes side. And I will say this. We're talking here typically when this comes up, that's the consideration is that person that is self-managing their single-family rentals. You don't have to self-manage. I choose to. I enjoy it. My wife and I do self-manage. I know other investors, they've handed their entire portfolio off to property managers. That's perfectly fine. I know other investors that aren't in the single-family sphere at all, and they're passive investors in multifamily. None of these things apply to them. Tenants, taxes, toilets, they're somewhere in the background. They're just enjoying that mailbox money. So if you're afraid of even the slightest headache, look at becoming a passive investor in multifamily. How do you learn more about that? Well, you can go to lifestylesunlimited.com. There's a button at the top for our free workshop. You can do that from the comfort of your home, online. Learn about the 2 paths of investing, single family and multifamily, the ways we make money, 5 different ways in real estate, 6 if you're thinking about apartments. And beyond that, you're going to want to become a Financial Freedom Program member and go to our 2-day Financial Freedom Seminar. I just mentioned earlier in the show that's going on live right now in Nashville. They're on day 2. They're talking about apartments today. And attending that program, that's part of the Financial Freedom Program. You can learn more if you go to financialfreedomlivestream.com. And you can read about the benefits. There are other benefits, for example, our vendor hub. All of that's going to be available to you. Again, go to financialfreedomlivestream.com. If you do decide to join, boy, when I joined back in 2012, a 1-year membership was $500. Right now it's discounted. 2 years for $297 if you use the promo code SAVEBIG. Again, at financialfreedomlivestream.com, SAVEBIG, all caps, written together. Start getting out. Get out to, you can go to that 2-day as often as you need to. And it's a good thing to do. I go to that one at least annually. I mean, the markets shift a little bit, so it's good to go and refresh that knowledge. Keep that education current. You think about realtors, any trade, you've got to do those CEs, that continuing education. Get out there, go to the 2-day again. See what's changed. See what's new. Now, back to that notion, though, of a big headache and tenants, taxes, and toilets. Tenants, we talked about resolving part of that through proper screening, a strong lease, setting expectations with your resident. I call that resident education at move-in. And we're talking about taxes. Property taxes, yeah, those will be there. You better fight them every year. Keep that down so you keep your cash flow up. But the other part is the income tax. And here you have to understand, real estate is very much tax advantaged. It makes our positive cash flow. Let me take a step back. We talked about Del Walmsley has 3 rules to investing. We talked about number 1, never lose money. Number 2, the deal must cash flow. You have to be putting cash flow into your pocket every month. Net cash flow, positive cash flow. To do the deal. If it doesn't cash flow, don't do the deal. But in this example, we've got positive cash flow. And if you're doing it right, it's tax-free. So we're going to expense things like those fixed costs, like those property taxes that we talked about, insurance, those ongoing mortgage interest expenses. Those are all generally fixed. We're going to expense then depreciation. This is a non-cash expense. This appears just on our Schedule E when we file our taxes. Those items combined, and with that depreciation in particular, that takes us to a zero or even a negative in the eyes of the IRS. So we pay no taxes on that cash flow. And if you're getting into apartments, oh wow. We got into a couple apartment deals last year, again this year. The depreciation that you see there, if you have some wealth you need to protect, you have some income you want to cover, apartments is the way to go because you're going to accelerate that depreciation through something called cost segregation, which we won't get into today, but it allows us to pull a lot of that depreciation forward and make a big loss on paper. What's that do? Protects your income, saves your tax liability, brings that down. So income tax, on the real estate on the income tax side is very much tax advantage. A 1031 exchange protects us when we do finally dispose of that asset and we want to defer taxes on the gains that we've seen. We roll that into the next income producing asset or assets, houses, apartments, whatever that may be. Tenants, taxes, and finally toilets. Toilets goes back to 2 things. We already talked about this. Best product, best price. Fixing everything up front, and you're not going to have those toilets. The common misconception here is that my tenant, my resident's going to be calling me at midnight because their toilet is clogged. Well, if you put the best product into place, those maintenance calls will be at a minimum. And again, as we said already, set expectations. What is a true emergency? My wife, when we do the walkthroughs, if she's with me, she always likes to bring up this great phrase, fire, flood, and blood. I have seen none of the above. Knock on wood once more. Fire, obviously. If something's on fire, call 911. Don't call me. If the house is flooding, definitely let me know. That's an emergency. If there's blood, well, you fill in the blanks. What are we talking about here? Everything else needs to be in writing. Email is fine, but you don't need to call me. You're in a 3-bedroom, 2-bath house. If that toilet's clogged, go use the other one. Okay, set firm expectations is what I'm telling you here. And let them know, hey, I observe weekend hours. I observe normal hours. At 5 o'clock, I'm done. You email me at 6 o'clock on a Friday, I'll get to you on Monday, if it's not an emergency. So set clear expectations. And the last thing I wanted to mention is be sure to require that your residents have renter's insurance with a liability coverage. So if something does happen that they've caused, they cover that. Years ago, I had a resident drop a frying pan on a glass cooktop, shattered the thing. About $500 to replace. I said, well, they were kind enough to let me know they were up front. I was kind enough to replace it, and I was kind enough to send them an invoice, and they just forwarded that to their renter's insurance who cut me a check. It's as easy as that. But be sure to have that in place. That goes back to the notion of risk mitigation. And the last one that we talked about at the very start of the show, I've heard this a couple of times recently. It's just too slow. I'm building wealth far too slowly in real estate. Well, if you get out there and you buy that one rent house and you sit on it and you wait until you've paid off all the debt, yeah, you're collecting a little bit of cash flow, right? Maybe $400 or $500 a month, but you're just sitting on that equity. You're stagnating. Del Walmsley, his 3rd rule to investing is you cannot get rich slow. And just sitting, being complacent, essentially, on that one house, those 2 houses, those maybe 4 houses, maybe you've gotten that far, 10, it's not going to get you there. You've got to get some velocity to that money. Get it out. Sell the house. Like we just said, do a 1031, roll it into the next couple of houses or into apartments. Do a cash out refinance. Get that money out. Get that debt equity out of there and redeploy it. It comes down to velocity. Get into apartments. The wealth creation component on the apartment side of the equation is tremendous. We say here at Lifestyles Unlimited, you can retire in 5 years or less. We see members do it all the time. And if you want to meet members that have done this very thing, I want to give you one last website. I am very excited about this. This is an event that will be live and in person right here in my backyard, Dallas-Fort Worth. We will be having our Wealth and Passive Income Expo 2021, Friday and Saturday, Labor Day weekend. That's September 3rd and 4th at the Irving Convention Center at Las Colinas, middle of the Metroplex. If you're in Dallas-Fort Worth, you know what I'm talking about. If you're not, go check out wealthandpassiveincomeexpo.com to learn more. But boy, these hurdles you have in your head, these myths that you've heard, that you've built perhaps as hurdles to prevent you from taking that first step in real estate investing, come out to an event like the Wealth and Passive Income Expo. Talk to people. I'll be there. Our other radio hosts will be there. Our mentors will be there. Single family and multifamily. We had 5,000 plus investors last year. It is the largest in-person gathering of successful real estate investors in the world. And if you want to dispel and tear down those myths, that is the place to be. wealthandpassiveincomeexpo.com. Use my name for a $97 discount off of any of the packages, ANDY, all caps. It's been a pleasure speaking with you today. We've talked and hopefully dispelled some of those myths that are holding you back. You need to get out there and get started. Check out lifestylesunlimited.com, and remember, it's not the money, it's the lifestyle. You have a good day.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.